So Andrew, I feel like people don't always understand how the closing disclosure and the actual cost work. So I appreciate you taking the time to walk people through what is it like when you get to a real estate attorney's office and you're trying to close on a piece of property, and what do all those numbers and boxes actually mean?
Yeah.
So tell me a little bit, just an overview of when we go to a real estate closing, just how this document gets prepared and all of the things that just flow into it for the legal closing of real estate in South Carolina.
Yeah. And, at the outset, I should note that fortunately, the law changed several years ago. So, at one time when I first started practicing law, for example, a buyer might show up at the closing and see the closing statement for the first time,
Yeah.
Which was not good. It led to lots of surprises, unfortunately. But now with the the implementation of this new closing disclosure and various changes to the law in the past several years, a lender has to provide a buyer with the closing disclosure at least 3 days prior to closing.
Mm-hmm.
So that has eliminated at least in most circumstances, the element of surprise at closing.
Right.
Theoretically, a buyer should know what to expect when they get to the closing, because they would have received this and hopefully reviewed it prior to closing. So in terms of how it gets produced, several days or a week prior to closing, the lender will send the closing attorney a draft of the closing disclosure. The attorney makes changes on our end. We submit changes to the lender, and then the lender ultimately produces the final closing disclosure.
Yeah, and so it's pretty basic. You have the information here, the basic information. You always want to make sure that you review the document carefully, right? So people are looking at the closing date, the party names, the property address, the lender name, all those things that come into account. What we find as agents out there is that most people, they start to say, well, why is this on my side of the statement, or what is this fee for? I've never even heard of this before. So if you wouldn't mind, let's just kind of walk through some of the charges and how they roll down to the actual document.
Sure. This is the second page of the closing disclosure that we're looking at right now. I've broken up the page 2 into 2 different sections because that's generally how it appears. But section A is called origination charges. Sometimes this may be blank, but in most circumstances, there's an origination fee. There may be an administrative or document preparation fee. And then, if the buyer has bought down the interest rate by paying a fee, that would be collected here. If it was a VA or FHA loan, there may be fees associated with that appear in section A. With section B, these are lender fees, but typically these are services that the lender has retained someone else to do. For example, appraisals or getting a credit report, right. Flood certification, that sort of thing. Right. And then section C is mostly legal or title related fees. This would include the lender's title insurance, the title search, the buyer's attorney fee, that sort of thing.
Right. Okay. All right. So these miscellaneous fees, when they go down, we've got the section. I appreciate how you did that. Things that they did not shop for, that really was driven by just the lending process in general, and then exactly. and then things that the borrower could have actually said, hey, let's look around. I know somebody that does this, or actually, is that something on services C that the real estate company, the real estate attorney's office puts together? Because how does the title work for when you find your title company to do that? How does that work for the borrower if I'm going to a closing? The credibility of the title company and things like that.
Yeah, so at least in South Carolina, the law requires that the buyer have the choice to choose the attorney that they want. Sometimes, they're led to a particular attorney if they don't know someone, either through the lender or quite often it's the real estate, their real estate agent. But that's typically how that happens.
Okay. Well, let's step over to the next slide here, and this breaks down a little bit more. Take us from here, Andrew.
Yeah, so on this page, it starts with section E. These are recording fees. The most recording fees for the deed, for example, and the mortgage are pretty nominal. The biggest ticket item in terms of recording is the deed stamps or transfer taxes. That is a seller fee. So you'll see it listed in the seller column. Just for informational purposes, it's not, again, not a buyer fee, but it's still included on there. And that figure is determined by the sales price. So the higher the price, the higher the deed stamps will be. Section F is called prepaids. This is, for example, most lenders will require the buyer to purchase a full year of homeowners insurance at closing. So that premium would be included here. If you're required to get flood insurance, that would be collected here as well. And then the interim interest or the interest for the month of closing would be collected here as well. If taxes were due at closing, if the closing was at the end of the year and the tax bill was already out, that would be collected here as well. But it would be on the seller side. And then section G, if the borrower has selected to escrow for taxes and insurance, or if the lender requires them to, at closing, the lender would collect at least some money to go ahead and put in the escrow account so that when the tax bill comes out and the insurance comes up for renewal, there will have been plenty of money in there so that the lender can pay those fees.
Right. And that proration type of thing, I always try to, when I explain it, is that you're coming to a transaction and we need to have it where you don't have to track down the property seller later. We're making a clean transaction where things get prorated to the day of closing, and then people know what they should expect going forward. How do you help people understand when they say, hey, what's up with all these prepays? Like, why am I paying into this? It just.
Yeah, the best way to think about it is that.
What's your explanation of that?
Yeah, so for example, the taxes that you see there, a buyer may say, well, the tax bill isn't due until, the end of the year. But let's say you're closing in June, your first payment will likely be due on August 1st. If you just start contributing to the tax bill in August, you're not going to have enough money in that escrow account to pay the entire tax bill. So that's why the lender collects money up front. Right. So there's plenty of money in there, and they don't have to look to the buyer at the end of the year for a deficit.
Right.
And then moving down to section H is just other related fees. So for example, real estate commissions are collected here. Obviously that's listed in the seller's column, but it's still collected. If their property is in a neighborhood that has a homeowners association, typically those HOAs will require certain fees to be paid at closing. The seller's attorney, their fee gets collected here, and the owner's title insurance would be collected down here as well. And then, if there's other, miscellaneous charges like repair invoices that haven't been paid, this is the section where that would be collected.
Right. Okay, and so when all these costs start to flow to the actual part where people say, well, how does this impact me and other parts of it? Walk us through this one here.
Yeah, so section 3, if you're familiar with the old HUD statement that used to be used in real estate closings, this is what the page 1 of the HUD statement looked like. It's really sort of a general overview of the whole transaction. So the left side is the buyer side. You see, starting with the purchase price, we just hypothetically, for simplicity, we've just put $1 million for the purchase price. Next, you see the closing costs. This $32,000 figure is essentially what was itemized on page 2. It's just now, collectively shown there as a single sum.
Right. Let's go back to that. So yeah, you see down here the closing cost, D&I, it's got the 32,706.46, and so that comes back to this document here under line 3. Yep.
Yep. And then next, you see that $1,000 figure. That is a proration, which David, you were just mentioning prorations.
Yeah.
This is contemplating that the seller paid homeowners association dues at the beginning of the year. They paid the entire year's worth of homeowners insurance. Because the buyer is going to get the benefit of that for the rest of the year, the buyer is paying the seller back for their prorated share based on the day of closing.
Right.
And then you see, then at the bottom, or sort of midway down, you see a $50,000 earnest money deposit being credited back to the buyer. The loan amount is shown as a credit. That's $750,000. Next is a seller credit. So it's pretty common for after, the buyer does inspections, they may require or request that the seller fixes things in the house, but it's also very common for them to just say, instead of repairing things, I just want a credit. Yeah. So here we're contemplating a $5,000 credit being paid to the buyer.
Right.
And then the tax figure you see next, this is, again, a proration. So the seller has owned the property since January 1st. So from January 1st up through the closing date, the anticipated tax bill is attributed to the seller. But the buyer will be responsible for paying the entire tax bill at the end of the year. So what generally happens is the closing attorney estimates what the taxes will be. And generally that's done by just looking at the tax bill from last year. Taxes typically don't vary a great deal from one year to the next. So we use that figure. And then it's prorated based on the day of closing. And so the seller here is giving a credit to the buyer for the seller's prorated share of the property taxes. Right. And then all those figures are sort of calculated together. And then at the very bottom of the left-hand side, you see that the borrower is having to come up with $227,000 and some change at closing. That's the money that would be wired to the buyer's attorney. The buyer's attorney would then be doing all the disbursement of all the funds at closing.
Right. Okay. And we're hearing a lot today, and you guys are always so great about this. It's just, I guess this wire fraud thing, it's not a joke. It's not just an email signature the attorneys put on their email. It's just unbelievable with the amount of fraud out there now. What is your recommendation just to validate, make sure that things are going the right way when people are wiring funds for closing?
Yeah, absolutely. You're absolutely right. It's not just a problem, it's an epidemic. These fraudsters are, they've been at it for probably 10 years and they're just getting better and better. Wire fraud typically happens through email hacking. So even though, in this day and age, we really don't have much of a choice but to email wiring instructions to buyers. But we do that with a caveat. You never wire funds without calling the closing attorney and verbally verifying those instructions. I can't emphasize it enough. I know lots of people who have lost hundreds of thousands of dollars through wire fraud. It's just a terrible problem.
So your recommendation is when the funds are, the instructions are emailed to the person that's ultimately going to be responsible for, in this example, wiring the 227, to call the attorney's office and to verbally confirm what they received in an email with the paralegal or the attorney that they've been working with, just to hear a human voice that says, this is the routing number, this is the banking account number, and this is the dollar amount.
Exactly. And, definitely don't fall for these schemes where after, for example, you've verified wiring instructions, if you get a follow-up email saying we've changed our wiring instructions, don't believe it.
Yeah.
It just doesn't happen. Most attorneys have their trust account set up for decades. They don't change.
Yeah. It seems so basic, but it's you have to confirm it. You just have to. And I think that's why it's been so successful, is because people don't confirm and then they say, oh, it's fine. They do this all the time, and that's how they get in trouble. I can only imagine how difficult it is to try to get the money after it's already been stolen.
Yeah, not only difficult, it's usually impossible, because these typically it's an account that's just been set up. Once the money is hits that account, they typically move it to another account and close the account that it was received into. And usually these people are overseas and are undetectable. So, yeah.
So please be careful with all your wire instructions. Let's move to this document here and see if there's anything you'd like to discuss here.
Yeah, so this is not something we typically spend much, if any, time at closing discussing, but it is helpful information. It tells you things like, is your loan assumable, which most loans these days are not. But certain government loans can be assumed by a subsequent purchaser. Tells you if there's a late fee. The general rule of thumb is with almost most conventional lenders these days, your monthly payment is due on the first of the month. They're considered late after the 15th, and after the 15th, a late fee would be imposed. So that's something to keep in mind. These days, most people set up an auto payment, so that's for those folks, it's a late fee is not really something to worry about. But and then it also mentions whether there's a prepayment penalty, which these days there really are very few loans that have prepayment penalties in the residential world. And then there's some information about escrow accounts, but that's sort of just general information here on this page 4.
Right. Okay, and then cover here.
Can you say that again? I'm sorry, you broke up a little bit.
Anything that you'd like to cover here on the page 5?
Yeah, the page 5 is it's really just contact information for the parties involved in the transaction. It includes the lender's information. If there's a broker that brokered the loan through a lender, it would list their information, both real estate agents and the settlement agent or the attorney information. And then this is at the bottom, this is where the buyers would sign to confirm their understanding of the closing disclosure.
Yeah, and I just tell everybody to hang on to this package. It's amazing to us when we're agents and we go to list how many people can't locate their closing package. And I get it, time passes, but to have this document really sets you up for success if you ever decide to sell your property, because you have the best information. And I know you guys send that out electronically. You send it out hard copy. You give it to them at closing, but it just shocks me sometimes how people just don't have that in a safe place. I always recommend put it in your safe at home, or make it electronic and back it up somewhere. But this is a very helpful thing to keep going forward. And I just recommend that people do that all the time. So what would you like to approach on the other side of the document here, Andrew?
Well, real quickly before I move on to the seller's closing disclosure, the one thing to note about the buyer closing disclosure is that this, it contains some personal information. It has, the fees that the buyer is paying. It's got financial information about the buyer. So this is a private document. This is not something that the seller would see. Some of this information would ultimately, be known to the seller because we generally prepare a combined closing statement. But it's just worth noting that the details that are included in the borrower or buyer's closing disclosure don't get shared with the seller.
Great.
And then the seller closing disclosure is pretty simple because from a seller's perspective, there's really not a ton involved from a number standpoint at closing, because the seller is not paying for lend fees and that sort of thing. So on page 1, this is just a general summary of the transaction. Again, at the top, the basic information includes the closing date, the parties' names, the property address. And then in terms of the numbers on page 1, it shows the purchase price, which again is shown here as $1 million. Next, you see the proration of HOA dues, which is exactly like what you saw on page 3 of the buyer closing disclosure. And then below that, you see the total closing costs. The total on the seller side usually appears higher than the buyers because the seller is typically the one that's paying real estate commissions.
Mhm.
So that $70,000 figure is mostly real estate commissions. And that figure is then itemized on page 2, which we'll go over in just a second. Next, you see a payoff on the seller's mortgage. We've got that as just a round number, but that would be an exact figure that includes the principal balance on the loan plus whatever interest that's accrued from the date of the last payment until the closing date. Next, you see that $5,000 credit that you saw on page 3 of the buyer closing disclosure. This is again contemplating that, for example, the buyer did an inspection, maybe found a few things that they weren't happy with, and instead of insisting on those things being repaired, they just asked for a lump sum credit.
Yeah.
And then the next figure you see is that tax proration, the seller giving the buyer the seller's prorated share of the taxes from January 1 up through the closing date. And then at the very bottom, you see all those figures have been calculated together to get the net amount that is due to the seller at closing.
Right. Okay.
And then on the next page, you see just a breakdown of that, the closing costs for the seller. You see, first you see, a couple of miscellaneous wire payoff, mortgage satisfaction fee. And then on the next page, you see the bigger numbers, which that $3,700 you see is the transfer tax or the deed stamps. Then you see both agents getting compensated there at the bottom, and then a couple of miscellaneous invoices for repairs, and then the seller's legal fees.
Right.
So that $71,000 you see there as the total, that's what you saw on page 1, seller's closing disclosure.
Right. So all this is summarized on page 1, right, Andrew?
Correct.
Okay. And so when we get to that, this question comes up all the time: is how much is it going to cost me to pay all my closing costs? And do you have a rule of thumb that you use to give people an estimate? I try to estimate a little bit high. I'd rather be surprised on that. Or is it really just all over the map?
It can vary pretty significantly depending on the lender, because there are some lenders out there that have a lot of fees. So I don't have a rule of thumb. I know some agents that tell people a percentage of the purchase price, and from what I understand, they say that tends to be pretty accurate. 1% or something like that. I don't really have a rule of thumb in terms of how that goes, but instead what I do is if a buyer comes to me at the beginning of a transaction and says, I want to have an idea of what I'll pay at closing. We just prepare an estimated closing disclosure and provide it to them, with the disclaimer that, hey, we don't know who your lender is going to be. We don't know, how much your insurance is going to cost, but we can give you a general idea. So that's our approach.
Yeah. So how long does that take to prepare? And would you prefer that someone is under contract and doing that, or how does that go, Andrew?
It varies. I have people sometimes that come to me who are just, in starting their search for a house. And, if they tell us what they think, is an approximate purchase price, we can prepare a closing disclosure just based on that.
Yeah.
Of course, we can't guarantee accuracy, but we can give you a general idea of what to expect. And it doesn't take much time. It doesn't take much time at all to prepare those. We can, usually get them an estimated statement prepared in 20-30 minutes.
Yeah. What's a reasonable time frame these days for people to go from writing an offer and going under contract, and they haven't notified an attorney yet, and then of course they do that the day of or the next day when they're placing earnest money? But what's a realistic time frame to do it quickly on one end, but not at an extremely stressed out pace? Like, what would you recommend that the contracts are written timeline wise to get it all accomplished?
Yeah, I would say that an average is about a month. A buyer going to going under contract on June 1st. I would anticipate their projected closing date is probably about August 1st. Excuse me, July 1st. But it varies. A month is plenty of time. From our perspective, the biggest time investment is getting a title search done. We need a little bit of time for that to happen. We can ask favors of title abstractors to get one on a rush basis, but we'd like to have at least a week. Sometimes if a title search is complicated, it might take 2 weeks, but that a month would give us plenty of time, in other words.
Right. So on the short end of the stick, probably the closest that doesn't make everybody pull all the hair out is maybe 2.5 weeks, and then more reasonably somewhere between 30 and 45 days.
Yeah. And the 2 weeks would probably be ambitious if you're getting a loan. Lenders, have much more on their plate than the closing attorney does when it comes to preparing for a closing, because they have to, vet the borrower. They have to collect all kinds of financial information and make sure that the buyer qualifies. And that sounds like it should be a simple process, but again, the laws that have been enacted in the last several years really impose, somewhat of a burden on mortgage lenders to carefully document the buyer's ability to repay. So they really carefully, evaluate the financial status of a buyer, and that takes time.
Well, Andrew, I appreciate this. It's always appreciate you being so thorough. If people have questions, how could they reach you to run those by you?
Yeah. So my office number is 843-881-3700. And I'll send you my email address. So if you want to put that on, email is usually the best way to get me. I'm not always at my desk, but I'll always have some sort of technology with me that allows me to check my email wherever I am.
Well, we appreciate this, and we appreciate you always being so thorough when you've helped us prepare these, not only personally, but also professionally as an agent. So thank you for taking the time to be with us. And ladies and gentlemen, if you have any questions, I'll have all the contact information here under this and the notes, and we'll try to load the disclosures for you as well, so you can take a look at what Andrew's prepared for you.
All right, sounds good. Thank you.
Thanks.